Hey guys, this is Karthikeya Kandwal from Apex Finser and I'm back with your daily dose of charts for tomorrow's trading session. Without wasting much time since it's already a bit late for today's video, moving on to what's new directly. Starting with the first one, the first equity trade that we have is a long plan on Dr. Reddy based on the strong high low formation. We're going to go for a long at 5200, a strong psychological support, plus it also is close by to a strong demand zone and happens to be the originating point of the high low formation. We're going to go for a long at 5200, stop loss at 5130, ideal targets 1% on the upside. Moving on to the second one, M&M. Similar to Dr. Reddy, we have a long position planned, but we do not have that strong of a high low formation right here. So we're not going for an aggressive long near 730. Instead, we're going for a slightly conservative approach at a role reversal level at 725. Stop loss at 715. Ideal targets 1% on the upside. The third one, Tata Steel, is a short position. This is slightly aggressive to balance out for the conservativeness that we have taken on M&M. We're going to go for a short at the swing high point at 695 with stop loss going above the highs at 705. Now the reason is we have a same high, not a high, but rather two consecutive same swing highs. So we're going to go for a short there. And well, it also is resembling a double top formation after a strong uptrend from 590 till about 100 points at 690. So let's see how it goes. The fourth one is ACC. On ACC, we have a pullback trade, a long plan, again being slightly aggressive because it happened to be a really strong supply zone, now broken very strongly and reclaimed, or should I say, role reversal is also proved today itself. Long at 1650, stop loss at 1630, ideal targets 1% on the upside. The final equity trade that we have is a short on Mindtree, where it is again a bit aggressive. We're going for a short near the nearest swing high, which also happens to be a short-term supply zone at 1720. Stop loss at 1740. Ideal targets 1% on the downside. Talking about the indices, because well, tomorrow is the expiry, and I believe that is where you guys are actually most interested in. Now, I told you guys that every pullback is an opportunity for long. And to be honest, 14050, 14075, I told you guys, wahan se you can see it gave, I can't say that it gave a really good up move, but for intraday traders, you got around 0.6 to 0.8% on Nifty, which is not quite extraordinary, but I guess it's still fair. Now for tomorrow, I have a trading range between 14090 till 14190. It's a 100 odd point range, and between this range, I don't think there's a good trade on Nifty. It's buy above or sell under. The charts don't really have anything strong for me personally right now. However, when I talk about the option chain, there has been a lot of put unwinding today. If you look at the option chain and if you're able to read it, you are likely to echo my opinion, and you're likely to understand that a lot of strikes which are close, which were supposed to act as close support, such as 14100, 14000, 13900, all of these strike prices have witnessed massive put unwindings. So a lot of the option writers have packed their bags. Now I believe they were the retailers who were selling puts regardless of the market situations, based solely on the strong up move that we have had. But as of now, well, we do not have any strong support levels from the option chain. However, going by the option chain strictly for levels, we have resistances at 14200 with a massive 2.3 million change in open interest on the positive side, significant at 14300 with 1 million positive change. On the downside, you have support 14100 with negative change but total standing of 2.6 million contracts, significant at 14000 with total standing 3.3 million added contracts. When it comes to the PCR of volume, we are back in the aggressively bearish range at 1.06. So this is what leads me to believe that most of the put writers were retailers who were heavily leveraged, because they seem to have closed their positions on the sold puts and have bought heavily puts for tomorrow. But let's see how it goes. To be honest, my advice would be to wait for the first 30 to 45 minutes, let the candles form, and then take a trade on the index. Moving on to the second one, which is Bank Nifty. Now Bank Nifty, if you remember our Fibonacci levels yesterday, we had an exact buy plan near 31550, 31500, and that is from where we had a really nice 300 points bounce. So if you were following our charts on Bank Nifty, you could have got easily around 200 to 250 points, if not the entire 300 points. For tomorrow, I would suggest 31,700 is to be taken care of. That is the decisive level. Above that, we'll see 31,900. Under that, we'll see 31,500, which is likely to act as nearby support for the short time. When I talk about the options here on Bank Nifty, we do not have any strong put unwinding or call unwinding here. However, talking about strictly the levels, I have immediate resistance at 31,800 with 112,000 added contracts, significant at 32,000 with 1.6 million added contracts. On the support side, I have 31,800 with 247,000 added contracts, significant at 31,500 with 153,000 added contracts. The PCR of volume comes in to be at 0.96, which is bearish but not as much as on Nifty. Here again, I give the same advice: wait for the first 30 to 45 minutes before you enter a trade so that you can come to a clear bias based on the price action data that has developed so far. This marks the end of today's video, guys. This is all the information that I had to share with you guys. I hope that you are able to use all these things together to end up on the green side tomorrow. I wish you all a really nice trading session and a wonderful but exciting expiry. Thank you so much for watching. If you are liking the video, don't forget to like, share, subscribe, leave a comment and press that bell notification icon as well. Have a good night. Bye.